The reality is, up until the bombs dropped in Iran, the main concern for us was inflation. The main concern for us was tariffs.
Good morning to Dale Smothers. Good morning.
Good morning. Stock market is also closed today with Juneteenth.
That's exactly right.
Sir.
And the stock market, I told you I hadn't been watching it a whole lot lately, just been giving myself a little bit of a break, but I did take a glance at it last night, and I'm liking the 19,500 on the NASDAQ composite.
Right.
That's cooking with gas.
NASDAQ's doing well. The S&P 500 is about 2.5% off all-time highs. All in all, things are looking really good. There's a measure of sentiment, Larry, that comes out on a monthly basis. It's called the Michigan Consumer Sentiment. And the sentiment across American consumers and American investors is at a very, very high level right now. And I think that shows with the common person just saying, hey, I haven't really looked at the stock market much in the last little bit. It's because things have finally calmed down. And then the bombs start dropping in Iran. So this causes a little bit of panic in the market, but it's nowhere close to what we're used to seeing when things like this break out in the Middle East. And that should give us a lot of optimism. The labor market stays resilient. Oil prices have not went to $100 a barrel, which is traditionally what we see again in this type of environment. We look back to say 2011, Omar Gaddafi and Libya and that whole thing that kind of went down, and America was essentially behind the regime change at that time. I think that history is something that the current administration is going to be studying and hopefully taking different steps along the way to do the right thing. The reality is, up until the bombs dropped in Iran, the main concern for us was inflation. The main concern for us was tariffs. Now, what we're really focused on, not that we've forgotten about those things, because we still have deadlines coming up. In July, we've got a deadline with the EU and the trade deal of what's going to happen with that. We've got a deadline in August with China and the deadline of what that trade deal is going to look like. Those are all very important. But the number one thing is what's going to happen with Israel and Iran. And when we see when that all clears, when all of that becomes a very crystal clear picture, I think that the market continues to climb higher, and we could see even some rate cuts coming in the future. Now, rate cuts could theoretically be a tailwind for the market. You know, you think about war in general, typically that's not that good of a thing for the market in the short term, but in the long term, we tend to see some resolution, and with resolution, the market likes it. There's a lot of different things that could play out. So what do we do as an investor? This is the number one question. What do we do as an investor? If we're looking at our 401k, we're seeing that it's kind of back to where it was, maybe just a little bit higher, depending on how you're invested. And if you haven't seen it get back to where it was, maybe you need to relook at your investments. But if that's the case, what we've got to do is start reevaluating the amount of risk that we need in the portfolio. And we do that based off of how close we are to retirement. If we're close to retirement, there's no need in risking this money that you're going to need to generate income if you've already won the game. What I mean by that, Larry, is if you've got enough money right now to generate the desired income you need in retirement, then why are you risking it for more? You know, it's very foolish for us to
So what you're saying is conservative, be a little bit more conservative.
That's exactly, if that is you. Now, if you're young and you've got 20 plus years or even 10 years and more till retirement, then let's get a little bit more aggressive. Let's embrace this optimism that we find in the U.S. markets. But right now, if you're 5 years or less from retirement, right now is a perfect time to reevaluate how close am I to retirement? How much money do I need in retirement? And have I won the game of retirement? Can I successfully retire, with modest gains, 3 and 4%, as opposed to 7 and 10% rates of return? And by doing those 3 and 4% hunts, you miss a lot less. In other words, you lose a lot less money.
Totally
I'll tell
agree.
you one other thing that we see a lot of people quickly. We see a lot of people do this and they don't even realize they're doing it, is that they're putting money they already have to risk for money they don't even need. And they don't know they don't need that money because they've never sat down to actually calculate how much money they need in retirement. We can help you do that. And by doing that, you become a little bit more of a good steward of the money you already have, money that you've already earned.
You're the man of advice. Well, by the way, they left his interest rates unchanged yesterday. That's one reason why I looked at the stock market, because when interest rates were left unchanged, it didn't affect the market either way. It didn't affect it, which was good news.
It's good news.
That gave me a little bit of a guarantee and go, should I come out of this conservative thing and kind of loosen that up just a skosh?
Yeah. And again, that's really based on your unique situation is going to be completely different than your neighbor's unique situation.
Correct.
In retirement, you're on your own journey, and making your turns depends. If I was looking at you and saying, hey, how do you get to California? Well, Larry, I'm going to need to know where you're starting. I mean, if you're starting in Maine, it's a totally different discussion than if you're starting in Oregon. Those directions are entirely different.
Definitely.
And this is where we are when we think about what does retirement look like for you and where are you currently. Our team is here to help you make that happen.
As we wrap things up, I just want to congratulate you for turned on the TV, and I see Dale Smothers on Fox Business. So how did this happen? How'd you work this out?
Yeah, one of the things that we have sought to do in our entire existence since RDS Wealth Management was started, and really since I got into the industry 16 years ago, is I wanted to make sure that I brought good education, very good knowledge to the general public. And one of the things we wanted to do is not only just react to the news, but be a part of the news. And we have been on a journey essentially to be able to be a contributor nationally to the finance news and the industry. And just by the grace of God and just a little bit of dumb country luck, people have found us and asked us to join their TV stations and news broadcast.
Well, that's very impressive. I'm so glad that we have given you the chance to be on this broadcast and be on this radio station, because when folks turned on Fox Business and seen Dale Smothers on there just last week,
yes, sir,
it was very impressive. I think I sent you a text.
You did, and then what I love is that I'm able to represent not only my creator and my family, but this community. This community means the world to me, and our brand, RD Smothers Wealth Management, stands for something. And to know that it comes from this community, and it's got a national recognition now, and that will continue. Again, by the grace of God, that will continue to grow.
Congratulations!
Thank you, sir.
You certainly deserve that. So
thank you so much,
Dale. Good to have you on the program today.
Hey, good to be here, Larry.
Saturday morning after the 9 o'clock news. Dale Smothers, Retirement Matters.
Tune in. We'll see you there.